Good afternoon, Mr. Hassan. How are you doing? How are you feeling today?
Thank you. I'm fine, Radhika. Well, it's a busy day.
Yes.
I'm feeling great about it. I mean, there's energy flowing around. You know how it is with the annual meetings.
Yep.
But it's good to be on this podcast.
Great. Thank you very much for being here.
Thank you.
So, without much ado, I just want to understand more about ICIEC's work and what the organization has been up to and what the forward-looking approach is. So, I just want to start out with how ICIEC is addressing global trade risks. So, with that, I mean, the organization plays a key role, an important role in mitigating credit and political risks for investors across member states. How has this helped facilitate large-scale projects in recent years?
Great. Well, thank you. ICIEC, we call it as an acronym, ICIEC. This stands for the Islamic Corporation for the Insurance of Investment and Export Credit. It was established in 1994. It started business since then with its short-term, what we call trade credit transactions, and then later on we started doing the large-scale transactions. But what are we set up to do? We're essentially a de-risking institution for trade and investment in the OIC countries, which essentially means that the Islamic Development Bank has set up the ICIEC to enable or facilitate the flow of foreign direct investments into our member countries for their socio-economic development. So this is essentially what we are set up to do. This is what, our de-risking through the credit and political risk solutions that we provide. So we play both on the trade side of the aisle as well as the investment side of the aisle. Now, what could have happened if ICIEC today has not been established? I say this without any hesitation that we would have had a significant dent in the number and volume of trade and investment that could have come into the OIC region. What we have essentially done since establishment is to have done transactions worth $115 billion. So if ICIEC doesn't exist today, I can comfortably say that $115 billion worth of trade and investment dollars could not have been facilitated in the OIC region. Well, we operate both on the small, medium, and large-scale project level of investments. But if we to talk about some recent, deals that we have facilitated, I would want to look at things from hospital projects that we've done. We've supported the Côte d'Ivoire, Republic of Côte d'Ivoire in, attracting or mobilizing funding for regional hospitals, about 6 of them, and this would boost healthcare delivery in the country. In Senegal, we've done a very stretched, road network support, which stretched from St. Louis, from the north down to Dakar. Now, this is a commercial route, and every economic activity on that, lane. Now, that is also on the socio-economic side of the aisle. We've supported, agricultural related, projects in other member countries, strategic commodities and supplies of, essential industrial, goods in our member countries. So when you look at what our interventions bring on the large infrastructure project level, we've done enough. Well, there's always not enough given the demand. We've also done from the trade side, facilitating export of, critical goods and services into our member countries and also to non-member countries. So essentially, we're boosting the trade positions of our member countries and also making them an attractive, investment destination. As you would understand, our membership is wholly comprised of South-South countries. So these are countries that are perceived to be high-risk countries. So essentially what we have done is to substitute our AA rating for the benefit of our member countries that are usually unrated or very lowly rated. So this is basically what we bring to the table. The demands are much and are growing, and we also need more capacity to be able to meet those demands. Thank you.
Sure. So since you mentioned South-South,
Yes.
Is that the key area of focus? That is to say that you're advancing South-South cooperation.
Yes, because let's say our key goal is to serve member countries. If your member countries are essentially south-south, from the south-south extraction of the global order, essentially this is what you're doing. Now, what do? We bring the global capital from the north to the south through our de-risking tools. But these are areas that need more development intervention. So what we're essentially doing, being the broker of development between the capital-rich north to, the capital deficit south. So our focus essentially is to raise the levels, standards of living, economic prosperity of our member countries from where they are currently to where they desire to be in terms of, at least coming up the development ladder.
Of course. Having said that, are there particular countries, for example, let's take the African continent, since we're based here today in Algiers, in Algeria.
Yeah.
So are there specific countries in the African continent that ICIEC is prioritizing or could be sort of depositing more funding into or financing for? And also, are there specific sectors? I know that you mentioned health and infrastructure. So are these the core areas that you are focusing on?
Well, to start with, on the country classification, on the African continent, specifically whether in the North Africa, West Africa, we have membership in Eastern and one in Southern Africa. Now, we do not have specific preference or priority of one country over the other. We basically seek to meet the developmental priorities of each of these member countries, based on their own priorities. So we're essentially working with them, and for them. So this is how we basically approach things. So, but not all countries are on the same ladder of development. Some are on the lower rung of the ladder, some are at the middle, and some are actually walking up, that ladder. So we meet them at each rung of the ladder to see that they move from where they are to the next point. So we don't have, in terms of country prioritization, but yes, today we do have exposures or what we call interventions that we've done sufficiently in some member countries, which would impact our capacity to do more. And in other countries, we have done less, and so we're prioritizing them to be able to give them a little parity in terms of our development offerings. So for countries such as Cote d'Ivoire, we've done tremendously well with full recognition from the government. Senegal, we've done enough. We're trying to also do more, and that's on the West African flank. We're trying to do more in Nigeria. We're trying to do more in Togo. Togo just joined as our 50th member. So we're trying to do more there. We're also trying to do more in Benin, and so these are all focus markets for us. Guinea is a market for us that we want to do. We want to do more in Gambia. We want to do a lot more, even in Mauritania. We're doing, we're hosted today in Algeria. We've done export credit transaction with the Algerian Export Credit Agency, CAJEX. We'll be signing the reinsurance agreement with them tomorrow. What we're essentially doing is giving them more in reinsurance capacity so that they'll be able to also support SMEs for export and strategic imports in Algeria. We're also very active in Tunisia. Egypt is a very big market for us in Africa as well. We've done both on the trade side and the investment side of our, credit and political risk solutions offering. So down south, we're also looking at doing more in Mozambique, and on the central side, we've done good transactions in Uganda. We want to do more. So we do not have any pecking order when it comes to, our developmental offering. It's all on the table for countries, but we align with their developmental priorities. This is how we basically go about. Talking about sectors, like you highlighted earlier, now, why we have programs that have been endorsed at the board levels for ICIEC. We have food security programs, so we prioritize that. We also have our strategic realignment. We focus also on, economic resilient, green economic growth projects. We also focus on matters that has to do with infrastructure. So these are key areas that we do. We're also very big in supporting the energy needs of our member country in addition to their food security, programs. Again, socioeconomic infrastructure is also, because goal is to be able to support the real economy of our member countries. So we're not necessarily sector agnostic,
Right.
but we do have priority in terms of those sectors that would have the likely highest impact in terms of lifting lives and livelihoods.
Right. Okay, got it. Thank you very much for such a detailed elaboration.
Welcome.
So it looks like there's a lot going on, of course, particularly in just one continent.
Yes.
So as to say that, of course, there's a lot going on across different member states and across the world as well. So having said that, I think in the last year, in 2024-25, a lot of projects were able to move ahead or move forward thanks to ICIEC's backing as well. And you did mention some impactful infrastructure projects that have been supported and how they've benefited local communities. You also did mention the MOU that you are looking to sign tomorrow.
Yes.
So is that something that you can maybe say more about, or do we wait until tomorrow?
Well, I wouldn't like to spoil the fun. I think the scoop for you news agencies would be to see it when, after the press conference tomorrow, when we're signing these impactful projects. But just to give you highlights of these projects, this cuts across, supporting fellow multilateral institutions to be able to also support certain member countries in areas of energy, in areas of green infrastructure, as well as, their food security programs. Now, we do have that, but we have almost about 9 or 10 agreements to sign tomorrow. Some are MOUs, some are real transactions that we're closing, with our partners, and we're showcasing it to our membership so that they see, and the general public, the level and extent of partnership we have with our member countries. So it's a showcase of our impact in motion, if you would want to put it that way. So our partners are here with us, and they would really be a testament to basically what we do. There's a lot happening on the African continent, so much also happening in the Middle East, where we also do a lot of operations in the countries that have our membership. In Asia as well, we're very, very big on supporting both trade and investments. It also, we haven't done a lot when it comes to our membership in the South America, which is Suriname, but we're also working together with them to basically accelerate, interventions that we're making in that area. Specifically, maybe we're looking at doing, oil and gas transactions with their new discoveries. That might also help them to boost their GDP, just like their, neighbors in Guyana.
Right.
Now, so we are spread across 50 countries, across continents. Africa is one continent of attention. The Middle East, we also do a lot. Asia, we're very big on it. Central Asia, what we call CIS countries. CIS countries, we've done a lot in Uzbekistan, supporting SMEs in Uzbekistan as well. We have an active engagement with Kazakh Export, which is essentially the export credit agency of Kazakhstan. So we're giving them extra capacity to be able to do projects that are also of regional nature. So infrastructure, more or less, and trade is what we do in the CIS countries. So yeah, there's a lot to do, and there's just so little that we can offer without having to also, we have strong reinsurance partners behind us also doing this transaction. As you know, ICIEC is one entity out of many, and so we cannot solve all the problems, but we're also partnering with our reinsurance and member country partners to be able to deliver much good with the little base that we have.
Right, of course.
Great.
I think with more collaboration and partnerships, I think that really helps push forward what you're trying to do as well. So,
certainly, and that's the whole thrust of SDG 17, Partnership for Development. So we have to partner with like-minded development partners,
of course,
locally, regionally, and internationally.
For sure. But also with a lot of activity taking place, there are also risks involved, right? So can you tell me a little bit more about what some of the unique challenges are that ICIEC faces when providing insurance coverage for projects such as those that you mentioned, and how do you overcome them?
Well, thank you. We have pure commercial risk, which is essentially the risk that doesn't involve any sovereign, component to it. You're supporting corporates, exporters, corporates, and usual bank risk in member countries. These are subject to both regional, local regulatory changes. The challenges we also face is stability in member countries. Like I said, it's South-South, membership that we have. Some have governance challenges, and there are changes in policies, and that might affect businesses. So these are typical business-related risks that would occur in these countries. But we try as much as possible understanding using the risk analytic tools we have to basically do our underwriting in a prudent manner for those commercial risks. Like you're aware, the Trump administration came with sweeping tariffs, and this might impact trade as well. So it will necessarily affect the reasonable expectations of trade, concerns across the world. So that might also lead to some actually falling below their margins, which means they might not also be able to pay the payback facilities that they've taken on trade finance deals. So that essentially becomes a credit risk that we might have to also bear with. But we understand these are part of the, cyclicality of business risk. And having been in this business for 30 years, we've come to understand these business circles. We also align our underwriting as well as reinsurance arrangements to take care of this risk on the commercial side of the deal. Now there's the other side of the deal, which is the sovereign-related risk. Because for the investments we cover, these are sovereign-backed or related risk. As you are aware, some sovereign countries have shown signs of default, and clearly it's linked to debt sustainability issues. So what we do essentially is that we have these governments as our members. They are basically on our governance boards, so we essentially do projects that are of high priorities in these member countries. And as you would know, multilateral institutions like ICIEC, under the umbrella of IDB, enjoy what we call the preferred creditor treatment in our member countries, which means we're prioritized when it comes to issues of inconvertibility or liquidity squeeze in these countries. Now, this gives us extra advantage in mitigating the kind of risk that we take on sovereigns. Besides that, we undertake prudent underwriting on sovereign-related projects to ensure that the project economics supports the financing requested. We put project safeguards, we do risk allocations. These are all part and parcel of our underwriting process to ensure that projects are viable, not just bankable. So these are essentially the lenses we put on in supporting deals for our member countries. The risks are already overstated, so we have to do our own homework to ensure that while the risking, we also look at each and every angle. So risk in this business is evolving, and we also evolve with it as well. Yeah, so it's an unending game of mitigation and avoidance at some point. Thank you.
Yes. So there are risk mitigation procedures in place.
Yes,
for sure.
well structured, and it goes through iterative process.
Okay, got it. I'm also just curious, and how would this affect investor confidence?
Good. Now, investor or investments generally is a very shy concept. They go where money basically, as they say sometimes, is a coward. It goes where it's comfortable, right? So we are in a very risky market, or perceived. The market is perceived to be risky. But if you look at most of the countries we operate in, they have less in terms of sovereign default, almost zero. Zero record of sovereign default. So essentially, what you have is an overstated risk. What we do is to basically engage investors, tell them we understand this risk, we understand these countries, we understand these institutions that work in these countries. Investors basically look at the mathematical formula of putting X and reaping Y. And we want to tell them that given our understanding of X, it is likely that with us, we will take you to Y. So this is essentially what we do. We assure investors through our products. Our product gives them the confidence, the peace of mind, and this is essentially what insurance is. You buy a peace of mind. Peace of mind against political risk, peace of mind against expropriation risk, peace of mind against war and civil disturbance that would affect your investments, peace of mind against incompatibility and currency transfer risk in all and breach of contract. All these are packages that we provide, and understanding the perils in these countries, our packages basically give the investors the peace of mind to take their capital into these countries, stay for a long time, because again, we're not just facilitating the flow of investment, we want the investment to stay and yield the desired dividends for both the investor and the host country. So our tools, through the risking tools, through non-payment insurance that we provide, through trade credit insurance that we provide, has given sufficient comfort to investors. I give you an example. Even on the banking side, there are banks that, local banks in our member countries, that issue letters of credit. Now, those letters of credit issued by our local institutions in our member countries are not necessarily ones that give comfort to the counterparties that are meant to receive those letters of credit. So they have to use institutions in, especially Europe and other developed markets, to confirm those LCs. For them to add confirmation to the LCs gives the ultimate beneficiary of the LC peace of mind that a more worthy bank has confirmed it. Now, these banks also need comfort from institutions like ICIEC to be able to add their confirmation lines on those LCs. So what we're doing essentially is to say, confirming banks, we've given confirming banks just on one product the comfort to confirm a letter of credit issued by perceived, local institutions. So this is how investor confidence works, even on the financing leg. Talk more of the proper investors that are on the foreign direct investment, drive, bringing their capital, machinery, equipment, buying shares into it, project enterprises in our member countries. So I think across the whole spectrum, our product gives investors the peace of mind, the desire to deploy capital resources in our member countries and also trade with relative peace of mind.
Right. I think that this would bring me to the last question, which is looking ahead, how do you see ICIEC evolving in the next, say, 3 to 5 years to further support trade and investment in OIC member states? Sorry.
Well, great. It's good that you chose 3 years. I'm looking at what happens within the current global, fracturing of trade and, investment ties that we're having with the current position of the U.S. administration. Now, for us, we're taking, note of what is going on, and we're strategizing. ICIEC desires to be the leading, provider on facilitator of investment and export credit in the OIC region. In fact, the OIC specifically mandated the creation of ICIEC through IDB to achieve that particular purpose.
Right.
And to stay true to our purpose and remain relevant to our member countries. ICIEC adopting, we have a new strategy that is going to be adopted, the IDB Group Strategy 2025 to 2030, that would, to 2036, that will be approved at the plenary very soon. That strategy would define how we implement in stages our relevance to the member countries achieving their developmental objective. But ICIEC in the short to medium term would essentially engage more with our member countries, understanding their key priority areas, providing relevant solutions to them. We want to be able to offer them global solutions that meet their local requirements. Basically, a customized developmental approach. This is basically what we want to be able to do. We want to be able to also support them in their local currency, transaction support to also mitigate their debt sustainability concerns. We also want to be able to support their SME sector, knowing that the private sector development is the key, engine to propel their development. These are areas we are looking at keenly and would work through what we call the country engagement framework with our member countries. Our partners as well, we want to work with them, improve on what we have done over the time. So in partnership is another key part that we're also looking at to optimize what we've gained so far and be able to accelerate more development for our member countries. So we're looking at partnership, customized development objectives with our member countries, then country engagement framework with our member countries, as well as implementing what the Board of Governors will soon approve as our strategy. And I don't want to say what those are right now until it's
course.
formally endorsed by the
Sure.
plenary of the annual meeting. And we'll be sending out snippets of these strategic priorities very soon.
Okay, great. Well, that's about it, Mr. Hassan. Thank you very much for your time.
Thank you,
And,
Radhika. It's been absolute pleasure
Thank
hosting me here.
Likewise. Thank you so much.
Thank you, and have a nice day.
Thanks, you
Enjoy
too.
your time at the annual meetings.
Thank you. You
Thank
too.
you.